While we hear all this news about the commodity markets, here we are in South Africa. We had a flat day, no real movement on the JSE. We had around 10.7 billion rand passing through the market. So pretty much a lackluster day. Do you think that most investors sitting on the sidelines waiting for those Alcoa results later on?
Well, that's possible. Look, it was, in terms of turnover, it was a low day. But of course, you know, Alcoa, it's always the start of the earnings season and everyone gets excited about those earnings.
Does it excite you, Greg?
Well, as long as they beat their estimates, then I'll be pleased about that. You know, people have, the markets are at the moment looking pretty top heavy, so it's not unusual to see a bit of a pullback.
Let's delve into some of the big movements today. BHP Billiton up 2.3%, no surprise there, up in Australia to the tune of around 2.5%. European trade also much stronger, announcing more share buybacks. We know that was in the pipeline, but also a lot of speculation about a possible acquisition. And of course, I'm alluding to Woodside Petroleum.
Yes, well, Woodside, look, they haven't confirmed or denied anything yet, but the speculation has been there for some time. Whether Australia's Competition Commission will allow that to go through is also a moot point. But on the share buyback, you know, they bought back about 4.5% of their shares, but they bought it back at a very nice discount of about 14% to its last traded price. So they did a very good deal for shareholders. So that gave the share a lot of impetus. In terms of the potential for the Woodside takeover or not, I think it's too early to say.
Well, speaking of speculation, and let's see if it's too early to say, Nedbank up 1.5%, 151 Rand 51. Old Mutual in the meantime down over 2%. We have seen Nedbank bucking the trend with regards to the financials. We know it was up on Friday when all the other banks were coming under pressure. It's now up again today. Do you think that most investors, some of the speculators coming into the market and saying perhaps a deal is imminent?
A lot of first of all, on Old Mutual was ex-dividend today, so that could account for some of the weakness. But I think there is a lot of speculation in the Nedbank share at the moment. There's not, you know, they've put out no cautionary or notice. So after what happened with HSBC, I'm sure they would like to be 100% sure that some sort of deal.
Do you think a deal is imminent?
Well, it's difficult. I don't think that Old Mutual are a very strong holder of Nedbank. If they could get the right price for it, I'm sure they'll they will sell their shares. So, but whether a deal is imminent or not, I don't know. The share price, the market is telling you that they believe that.
Do you hold Nedbank at this point, Greg?
Yes, we do.
And what is your move going to be? Are you going to be holding on to hear more news?
Well, we'll certainly wait to see what happens while the share price goes up like this, above 150 Rand a share. So I'm very comfortable with that. But obviously, you know, it will be a case if the share price continues to run, then, yes, you know, they say buy on the rumour, sell on the facts, if it does become. But certainly Nedbank at 150 Rand is looking pretty toppy at the moment, given the outlook for the earnings.
You mentioned that overall in South African markets looking slightly toppy at this point. Where are you finding value, and do you think that we could see a bit of a sell-off coming to the fore? I mean, we were talking about gold and silver a little earlier. We could see a bit of a correction if things change in terms of monetary policy, inflation, and what kind of things we're pricing in from an interest rate environment in the US. Can we start bracing ourselves for a sell-off on the market?
Well, in terms of a US interest rate increase, well, I think, look, if the US starts to raise their interest rates, generally it won't be good for equities, certainly in the initial stages. But obviously, if interest rates are going to be more than one hike, then it will indicate that the US economy is starting to do a lot better than people believe. But I don't believe that it's anywhere near that yet. Housing is still pretty weak. Jobs numbers are still pretty weak. However, it is possible, you know, either the Fed are making a mistake by not raising now, or the Europeans are making a mistake having raised their interest rates, given the fact that, you know, a lot of the peripheral economies in Europe are still in some trouble, Portugal, Ireland.
IMF World Economic Report, if we could touch on the economy at this point, and the IMF coming out and saying that the global economy is not facing any major downside risks, saying that commodities, high commodity prices are not really going to hamper global economic growth. Inflation is going to be elevated for slightly longer. They're also talking about a rebalancing act as well, and I'm assuming they're alluding to interest rates. They didn't say so much, but surely that's what they could be alluding to as well. Anything that really stuck out for you in terms of what I've just mentioned?
Well, I think the key point is the fact that they say that commodities, they don't look like that it's going to derail the global recovery, and that's what the US believe as well. Mr. Bernanke feels that the commodity prices will lead to a temporary spike, and they will settle down soon. In terms of commodities, I'm more concerned about China and whether they continue to raise their interest rates. I think that has more implication for commodity prices than whether the US will raise their interest rates. If they do raise their interest rates, it will probably lead to a stronger dollar, and thereby also putting some pressure on commodity prices. But at the moment, it looks like, you know, it's the Goldilocks scenario, not too hot, not too cold, and but hopefully nothing comes along to derail that.